probability trading strategy, you're full of crap.
Things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right. Hey, Mike, let me ask you a question. Have you ever done everything right? Your setup, your stop, your entry, but yet you still found yourself breaking your own rules?
I think that we've all found ourselves there. When you said do everything perfect, that I don't know if I've done anything perfect in this stuff, but yeah, to answer that question, yeah, there have been plenty of times where I've broken my own rules in the past, and I take steps to make sure that rules are followed.
Right. Yeah. Right on. And excuse me. So, what do you think really causes that? Those are some of the questions we're going to ask, and what happens long term? I think this is the bigger question to ask: is what happens long term if that hidden pattern keeps repeating without you even noticing it? But today, we're going to break down the invisible forces quietly wrecking your trades. No, well, not your trades, but our trades. Even if you're a smart, disciplined trader. And
Yeah.
so just kicking the thing off, I'm sitting there going, well, wait a second. If I'm a smart, disciplined trader, how come this is still, why do these things creep in and destroy, self-destruct my trades? So anyway, hey everybody, I'm Dennis Wilborn. Welcome to the Trading Truths podcast. I'm here with Mike Lamothe, and we're talking. And over the last 4 episodes, we've talked to struggling traders. That's in episode 1. In episode number 2, we covered the 5 major pain points of trading. And then last week's session, I had a lot of fun doing this one. The 7 deadly sins of trading, Mike. I mean, and believe it, that was one of the best episodes that people have gone back and watched now, and I've got a lot of great feedback on that one. So today we're pulling back the curtain on what drives all of this, and this is an episode that's kind of about mindset. I know that's your specialty, and internal wiring. And if you want more, tools, just check out either Mike's book or my book, or basically, they really go well as a bundle with each other because they basically cover both the mechanics and the mindset. And so
Appreciate that, Dennis. Yeah, the trade your way to freedom, and the trading mind wheel.
Trading Mind Wheel.
Excellent books.
Great book, excellent book, a really slick read for everybody. His forward is by Mark Minervini, I believe, in this one, and then here's my book right there, and my forward is by this guy named Mike Lamothe. You know what? So
yeah, I never heard of him.
Yeah, no, never heard of that guy. Anyway, so you talked about being busy. The market's crazy right now. What are some of the traps, before we get into the main section, what are some of the traps you've fallen into when it comes to that aspect of self-sabotage or trading?
Well, let's talk about this market environment, right? Because this isn't anything new. The market plays the same song over and over again. And
Spot on.
So, well, when I think back to the last time that the market was really selling off hard like this, right? Well, we don't have to go back that far. We could just go back to 2020 and start to think about that. Well, the thing that would catch me off guard, and not even then, like I earlier than that too, it would be this fear of missing out. And the fear of missing out is one that can rear its head in this kind of environment because of the massive volatility. 1 minute the market looks like it's down 7 or 8%. All right, great. Now's the time to invest in that. Before we hopped on this call, I was actually getting texts from somebody that was a catechist. That well, we one of the things that I do at my church, I'm part of the faith formation program there, and we the people that teach, they're called catechists.
Okay.
Just reached out to me because he knows that I do this, and he's like, "Oh, is now the time to start to get in?" So even there, like that's driven by like this. Oh, like here's an opportunity. Am I going to miss this opportunity because prices are down so much?
Yeah.
That it and you know what happens? Well, earlier today, the market was down about like 5%
Yeah.
from Friday. Then it rallied. Then it was almost at Friday's high, and now it's back down again. That's the kind of crazy volatility that you're going to have. And when people try to think that this is the time to jump in, no, the time to jump in, there's only one time to jump in. And that's when your plan, your well thought out plan, your research plan, your edge tells you to. That's it.
Yep. That's right. And I know for my system, I have 3 setups and basically 1 trigger. And if those aren't aligned,
Mm-hmm.
it basically says don't take action. But
Yeah.
I hear you, because it must have been a good, the last couple of days must have been a good day for texting. I get this text from a group that I belong to, that is uh, a investment committee that I serve on,
Okay.
and basically the text come out with this statement. They were looking at the futures, and the text comes out and says, "Don't sell anything." And I didn't have the heart. If anything, this is the time to be buying and all that kind of stuff.
Mhm.
Well, but that is the depth of the rules that are followed by this investment committee, which makes it kind of like it's crazy, because it's not a really great structure. It's
Mhm.
a little bit built on, the foundation is built on sand rather than the rock, because they'll suffer a 50% pullback, drawdown
Yeah.
without taking any action whatsoever. And so I was thinking to myself, and I go, yeah, I'd like to send back a text to say, yeah, the time to get out was about 2.5 months ago when this thing turned around. I think Mark Minivini actually talked about that. I think he got out somewhere, I want to say early February, and I know my system was taking me out as we went, and so you're flat the market right now, right?
Yeah, we switched to what I call a red condition on February the 20th.
Yeah.
And yeah, on that day, that's when I had initially moved to cash. And since then, in March, I only put on 3 trades in total.
Okay.
Yeah, only 3 trades in March altogether, well, which is kind of nuts. The one was down 2%, another one was down 1%, and one was up 10%.
Yeah.
So I'll take that, and now I'm back to cash.
Yeah. Yeah. And I wound up Friday, like I think I'm at 5%. I was sitting at 5% invested. And this morning, now I'm sitting in what, I like to trade the inverse leverage ETFs, right? And
Mm.
so actually, I had some positions on with the inverse leverage ETFs that,
Oh, those
that
performed very
produce for us very nicely. But what I do is I don't go in and back up the truck and just say, "Hey, load it up, man, full up, and go full tilt and everything
well.
to the middle of the table." No, what I do is I'm going to go like 15 or 25% of a full position, maybe, but
Mm.
somewhere on, because I had my setup and my trigger. So per my rules, I have to take the trade. Because
Right.
if I don't take the trade, then guess what? I violated my rules. And how you do anything is how you do everything. If I cheat on my rules, gosh, I would cheat on life, and I don't want to be there.
Yeah.
I don't want to be in that position. Evan says here, uh, or is it Yvonne? Hold on just a second. There we go, Evan. Evan says, patient is a virtue, but on Wall Street, it is vital. Of course, I
Yeah.
always provide, and I
Absolutely.
know Mike does the same thing. My encouragement to people is be patient, be prepared. Yeah, as you're going through the, but what I was going to say
Well done.
also is, and I'm okay, and I'm okay with being short, being flat the market or close to flat the market. And
Mhm.
you mentioned when we first got started, and I want to get into this just a little bit before we jump into, you know, the beliefs you didn't know were driving you. You mentioned earlier, Mike, that um, part of you have a tendency to self-destruct or self-sabotage if you don't follow your rules. And so, what are some of the rules you have and processes or disciplines you practice so that you don't violate your rules? Therefore, you're not as
Yep.
susceptible to self-sabotage.
So the first thing that I'll do is every single day after the market's closed, I will run this paradigm right here. I call it the market's mood. Basically, I break the market into three different segments: the general market, your system, and personal performance.
Right
And
on.
I think that it's possible for an individual to put whatever they feel is important into these three, but I'll share with you what I'm doing. So I put the major indexes into the general market, and I
Okay.
like to look at them across time frames. Then, as far as the system goes, I'm trading growth stats, so I'll run screens and I'll see, well, what's passing my screens. Is that list expanding? Is it contracting? Am I starting to see higher quality stocks setting up? Am I starting to see trash or not barely
Right.
anything of quality? And then how am I performing? Because that should be the greatest tell of all, provided that I'm following my rules. And so by putting everything through this paradigm at the end of each day, and I'm well prepared for tomorrow. That's what's kept me in this game for so long, with very little drawdown and outperformance.
Yeah, without a doubt. I mean, I come in and I think the market is down. Gosh, what is it down? The S&P is down a little bit over 10% for the year. Maybe it's more by
Uh,
now. I really
oh yeah,
haven't
yeah.
taken a,
For the
huh?
year? For the year, yeah. Well, let's see. Well, what it's off the peak, it's down 18 and a half, almost 19. At one point, it touched 21% on the day. So bear market territory for sure. I mean, bear market and that's such a goof to me. That
What's that?
whole
What?
20% is a bear market. Like if it's 19 and a half and you get an action like this, it's not a bear market. Give me a break. Anyway.
Okay. Was that a grumble?
Yeah, sorry, just
So yeah. Anyway, yeah, it is down 15% on the S&P for the year, uh,
mhm,
and it is approaching that bear market territory. And the Nasdaq and the Russell had already reached into that. And so when I'm trading, okay, my autopilot trading system, okay, I'm down 3% for the year,
mhm.
but I'm up 11% on the S&P, which just
Yeah,
is another repeatable thing that we've done over the past 13 years is beat the S&P and hit that double digit return, which is not something that we brag about or not something we basically promise anybody, but that is just how the stats on my system have worked out. I think that if I were to answer the question about how do I avoid self sabotage, I I trade outside of market hours. What does that mean? I put in my orders when the market's not on so that I won't be susceptible to emotional reaction, where I'll be impulsive or compulsive in my trading. Because guess what? I've taken my, I've looked at myself and journaled myself, and I know that those are two traits that, regardless of how experienced I am and how successful I've been in the market, those two traits, compulsive and impulsiveness, will still crop up its ugly head. And I've been trading for,
Mm,
I thought that thing was solved a long time ago. Um, and so, what causes it? It basically is partly personality driven and all types of stuff. But I know that the fix for it is being mechanical in my approach. So that's why I designate and I do my planning outside of market hours, no emotions, and can then basically target shoot my entry. Like we had an entry on this morning on Riot. That's a crypto mining company,
mhm,
and it had come down and put in a beautiful hammer on Friday. And so I traded this morning, and this was all automatic. We had a trade on at the bottom of the hammer, because and bam, we got hit this morning. We filled, and when we put in our orders, we also include the stop loss and the profit targets. I had a 15% profit target and a 20% profit target, and then the rest of it I'll hold. And so, with the volatility in the market today, that that I went with a quarter position size, simply because
mhm.
the market conditions don't warrant being, going deeper than that. But within the first 15 minutes, Mike, I was filled with my entry, and then hit 15%, and then hit 20%. And so I'm done. And with that. And so I'm just sitting there, okay, it was all done, all mechanical. And so that's kind of and that happened so fast that if I hadn't have had my orders pre-positioned through my conditional orders, I could not have ever reacted that fast to try to day trade a situation like that. So
Oh, that's
that's one of
great.
the ways that I avoid self-sabotage, is just to stay mechanical and let the mechanics of my, mechanical system emulate my rules. And that's how I do it.
That's fantastic.
And so, well, excuse me just a second. There we go. So, let's see. What if the voice sabotaging your trades is the belief you didn't even realize, a belief you didn't even realize you had? Something like, do you think your identity affects how you trade? That's a great question, Mike. And so I'm going to throw it to you to answer that, though.
And I think that your identity definitely affects how you're going to trade, um, for better or for worse. What we want is an identity that isn't uh, better than where we're at, isn't worse than where we're at, but is actually accurate.
Mm,
Because if we're it's something that's one of those fine lines where if we are lacking confidence, and I've been in both of these boats, right? Uh, Having the skill set, having the knowledge, but lacking confidence for a variety of reasons. Well, whatever your reasons are, if you're falling into this boat, you could have read all the books. You could have read my book. You could have read Dennis's book. You could have read any other work, watching videos, studying, taking courses, what have you.
right.
If you lack confidence in your ability to be able to go off and execute, then and that's going to affect how you're going to trade. If you
Right.
identify somebody that has difficulty following through, that's going to affect how you trade. If you're somebody that lacks the skills and the knowledge, but you have an inflated ego, and if you don't have skills or knowledge, and you go off and you try to trade like a cowboy, then you're going to end up being this boom and buster, right? Because
Yeah.
every now and
Yeah.
then you'll get lucky, you'll get a few hits, but you'll also end up blowing yourself up. Why? Because you don't have you've never developed the skills.
Yeah.
So
Exactly.
so you want to have a clear assessment of where you're at, so that way you could uh, actually grow and actually develop the skills necessary in order to trade well.
Yeah. Do you think that part of the deal, this on this identity thing, um, the identity, a trader's identity, I think, has to change a little at a time. And it's like, yes, you see guys out on X, you see guys on Instagram, you see guys on YouTube, you see, you read books like, our
Mhm.
books, other people's books. And what isn't apparent or just kind of like what isn't spoken about is that when we have a book or when you've been very successful, yeah, you've got a whole body of work behind what you've done to achieve what you have achieved. And so that oftentimes when a newbie comes onto the scene and goes, I want to be a trader, uh, not a traitor, a trader,
Mhm.
uh, that they're overwhelmed thinking I have to take on this total identity of, like Mark Douglas or Mark Benavini or Michael Lamothe. I want to have to take on that total identity and be that person where when you have not done the reps necessary to take on the identity, you need to be your own person, your own identity,
Mhm.
but you haven't taken on the reps to establish the credibility of your identity and also learn to trust both yourself and trust your system. And
Uh,
I think that's a crucial part of one. I was talking to my wife this past weekend because we were talking about how busy our life is, and I said, Michelle, uh, when you've bit off more than you can chew, it's okay to spit some out.
mm.
And she goes, "Ooh, no."
Yeah, that, I think that's a great analogy. Spitting some out, and yeah, that when you spit some out, you're going to make a little bit of a mess,
Yeah, without a doubt. And so,
but it's necessary. Otherwise, you're going to choke.
yeah. What about self-talk? Self-talk is just absolutely crucial, critical, and all this type of thing. Have you ever been caught? Have you ever caught yourself saying, "I'm not good with money," or or basically saying, "Oh darn, I did it again. I didn't put in my stop loss. I'm such a dumbass," or something like that, where you're basically saying negative things to yourself, and which what do you think about when people do that to themselves? Isn't that a earmark of self sabotage?
It is, and I think that it's one that if you're doing that, you probably don't even realize that you're doing it because it's something that's been a habit for so long. That
Mm,
at least that's been my experience, and that's been what the my experience of the people that I've helped through stuff like that. Um, the Well, when you've been identifying with something for so long, and you've been ruminating on something for so long, and it's essentially become a part of who you are. Part of what part of the healing process comes from uh, the realization that you don't have to remain who you were. Who you are doesn't need to stay the same as who you were. We could learn from it. We could put those sins behind us, right? To throw back to
yeah,
last episode,
yeah,
and move forward.
yeah,
I think that they could give us some great learning opportunities, but it's very important to put those sins behind us and walk the path of trading righteousness, if you will.
Trading righteousness. Yeah, I appreciate it, brother. No,
Mm.
no, I agree wholeheartedly. Because in episode 1, when we talked about, what traders are really saying, if you remember, Johann was basically he was all hung up with revenge trading. I'm gonna
Yeah.
get even with because I lost and all this type of stuff. And I think I'm going to say something and you can just yell at me if you want to. But I think the best revenge trading is actually setting your course and trimming your sails so that you become a master trader and basically follow your rules consistently. Just
Mm.
every
That-
day, every day, every day, until you basically become successful. And again, I think that's the better type of revenge rather than thinking, oh, I'm going to get even with this market. Because if I think I'm going to get even with this market, you and I both know that doesn't end well.
No, not at all. He just reminded me of this famous quote, right? The best revenge is a life well lived.
Yes.
Yeah, that's precisely.
So anyway, we're going to jump right now pretty quickly into the next segment, which is where we're going to expose some invisible pressures that turn small slips into big losses. And so where do you feel? God, I hate that word because I'm a thinker. I'm not as much of a feeler as I am a thinker. However, my emotions still crop up to screw up my trading sometime. So
Mm.
where do you feel the most pressure when you trade? Maybe this is a proper question. So right now, where do you feel the most pressure?
Uh, where do I personally feel the most pressure in my trades?
Yeah,
Um, uh, it's funny. The thing that I've felt the most pressure with, and the recent, right, and uh, I'm doing better well with this. More so though within the last, I'd say, several months. And the thing that I felt the most pressure with is um, needing the pressure to perform or to find trades for others.
mm, yeah,
Having being involved in a business, running a social media, like
sure.
wanting to find something for somebody else to be able to trade it, and I felt that pressure. And you and I have been speaking for quite a while, and it offline as well. The spiritual journey that I've been on has been absolutely transformative, and I feel as though the Holy Spirit has guided me towards more the path of what I need to do is not find something for somebody else, but to stay true to a
Yeah,
system, and to walk boldly in that, and to not fear what somebody else might think because that's when you start to concern yourself with what others may think, then one, you're off path, you're off mission, but two, are you truly serving them?
exactly.
No, no.
Yeah.
So I'm much more comfortable now, just being like, look, this trade, I found maybe 3 or 4 potential trades. Uh, Honestly, when I took a deeper look at them, they're all the B at best. So I'm just going to continue to sit on my hands and wait in cash, and
Right on.
comfortable telling people, yeah, cash is a position too. And if you feel that from your system that something is an A level that you should be swinging at, then by all means go for it. You should. Your system is telling you to. But if it's not, trading is a game where we could keep the bat on our shoulder for as long as it takes.
Yeah, yeah. Yeah, it's if the pitcher's not throwing, I love that analogy or that picture you shared a couple of weeks ago with Ted Williams, and he had he had the strike zone, but he had those high probability areas in the strike zone where he knew that if he got the pitch in that area, that he would typically hit for over 400, which was absolutely
Yep.
amazing. And I think, in trading, we talk about know your batting average. Know your batting average. What types of trades lead to the best successes. And I think also in doing that, there's some pitches where that are in your power zone for batters and all that kind of stuff, where they can drive the ball for extra base hits or maybe even home runs.
Oh
And
yeah,
they also
absolutely.
know, well, okay, sometimes I got to hit for the single. And
Hmm.
and so, and I think that's directly relatable to our trading in
Hmm.
that guys, it's okay to go for the single. And sometimes the single, and so it's also okay to go for the base on balls, if you will. And what's the base on balls in this analogy? The base on balls is sitting in cash, waiting for the gosh darn market to come to you. And I'm sorry if I get a little bit, if I sound like I'm a little bit, I'm not meaning to sound emotional, but
Hmm.
it I just want to help. I want to help folks and drive home the points that each one of these can become a discipline that you can practice. And if you practice the discipline long enough and get enough reps, you will find yourself becoming, there's that identity thing, becoming a master trader. So, hey, if you're listening here, and I want to thank everybody who's on board, Mike and I just absolutely love it. But we also like it when you're vocal. So, now let me ask you a question. Where do you feel the most pressure when you trade? I know some
Mm.
of it may be, well, I need to make cash, or I know, in my past trading, I'd sit there and go, oh, yeah, I want to make $2,000 a month trading and blah, 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 blah. Because what I'll do with that $2,000, it will supplement my income and all that type of stuff.
Mhm.
And what I find is, for whatever reason, when I would approach my trading from that perspective, it added unseen pressure to me to perform, which then it's like I guess I'm stuck on baseball analogies today. It's like walking to the plate and your team is down, 2-0. There's one man on base, and you need a home run, and so you're swinging for the fences, and typically the odds are against you when you're swinging for the fences.
Yeah.
So do you have any non-baseball analogies, Mike, you could throw on us?
Um, not yet, but I'm sure they'll come.
Okay. So what kind of pressure do you think is costing you consistency? And please, folks, jump in and leave a comment. So what and because if you remember in Spella's story, she said overcorrecting emotionally to fix previous trades was one of the things she struggled with. So,
Mhm.
what kind of pressure do you think is costing you consistency, or or the traders you work with, Mike? Which one is what pressure is that?
Um, so if somebody's busy staring at their P&L and they're
Mm,
seeing it fluctuate day to day, and they're in a volatile market like the one that we're in,
right.
then that's something that will drive all sorts of emotion. Particularly if they don't know the stats of their system. And there's all sorts of stats for our system. One that is a very good one to understand for your system is the max drawdown
Mm,
of your system.
yeah.
If
Yeah.
you're trading in a particular way, um, and you know the types of setups that you should be taking, and you know the position sizes you should be taking, and you know when to be in, understand like, well, what's the worst case scenario for this system? Should I see a 5% drawdown off the peak, a 10% drawdown,
Yeah.
more than that? oh, what should it be? Because if you understand, well, what's the maximum drawdown? Just that
Right.
one number. Well, what's the maximum drawdown? Then you have a better understanding of where you're at and what to expect. And then wild markets like the one that we're in become a little bit less scary because you still know, even if you're you're on some windy road, you still know if you're on the proper route or if you're lost.
Yeah. Yeah. That's good. So, yeah, that being on the proper road, I think, is really, um, is a good story because the oftentimes uh, it is so easy to get into trading. Yeah, the at least the initial getting into
Yeah.
the price of getting into trading is
Yeah.
quite
Hold on,
low.
hold on. I just opened up a new account. Anyway, continue.
Okay. That's awesome. But it's so easy to get in, and unfortunately, the fact of the matter is, that I think in turns leads to this misconception, false belief that trading's easy.
Mhm.
Trading's easy. And so I think that also, is one of those silent killers because then when you've been at it for a couple of months or a couple of weeks or however long, and you're starting to place your first trades, uh, oftentimes, and I think there's a Murphy's law of trading, if you will. Some people, they place their first trades and it does really, really well, even though they have no rules, no clue, no anything. They're just saying, oh, Joe Blow said to buy this stock at this level, and I'm going to do it.
Mhm.
And so that happens the first time, and maybe they make a profit the first time, the second time, and then the third time it hits the fan, and all of a sudden they have no stop loss, and all the money that the profits that they made are wiped out, plus some of their capital, maybe all of their capital. And what it does is leaves a person then frustrated, confused, and afraid of losing money. And so I always heard scared money doesn't make money because it's really interesting because I know I've tried to trade for a couple of people and they were so fearful. Their fear, and this sounds weird, but their level of fear was so thick that it affected everything I tried to help them do with their,
Mhm.
and part of the thing is they wouldn't, get into the discipline. So, we've got something coming up next session, next week, Mike, on the 14th. Bobby Campos, a really good friend, a longtime friend, a really wonderful guy, and a great trader. And he loves Investor Business Daily. I wore this hat just for you today, Bobby. Uh, will be our guest, and we're going to be walking through some of the. I know he wants to talk about the holy grail of trading education. So that'll fit really well into what we've been doing. So what's a person to do as we complete this segment number 2 is what about taking one of those weekly pressure audits where you identify where your pressure comes from, and is the pressure even real, or is it imagined? And I know in some of our early discussions, Mike, you talked about asking the question why again and again and again. Can you walk people through right now when people are analyzing their trading style or what's going on with trading? Is that you have to get to the root causes, and you do such a wonderful job of explaining that. So,
Sure. So if you're trying to figure out the reason driving something, you want to question it like you're like you're a 5-year-old. Like,
Okay.
like how when a 5-year-old will ask you a question, and then you give your answer, and then they say why, and then you give an answer to that, and then they say why, and then you give an answer
Yeah.
to that, and it keeps on going. Well, that's actually a great way to get to the root cause of uh, why we're in this game, or really to question quite a number of things. So if you're struggling with say, well, why do I keep on making uh, the same sort of mistakes, or maybe a better question might be, well, you know, how can I improve my trading, and why is improving my trading important for me? Right?
Okay.
Ask the
Good.
question from in an empowering way, because if we ask it in well, why do I keep on making the same mistakes over and over again? We might get a negative response back. Well, because you're an idiot, that's why. And,
Yeah.
you don't want to go down that path. So asking or framing the question in a good way is important too. And so, um, if we frame the question well, and we're asking it, how can I improve my trading, and why is improving my trading important? And we start to ask why of those kinds of empowering questions, I think that we get at the heart of what's driving it, and why it's important.
Okay, well, let's do a little play acting here. You're my mentor and you're coaching me, and you go, and I'm going to say, uh, you know, uh, Mike, I really want to improve my trading over the next, 90 days. Now you're going to ask me why,
Oh,
right?
yeah. Well, that sounds like a great goal, Dennis. So, why do you want to improve your trading in the next 90 days?
Well, I want to improve my trading because the the 90 days right before this were really terrible, and I basically didn't follow my rules, and I lost a lot of money.
Oh, that's interesting, and it's great awareness that you took the time to see that. The reason why you lost some money was because you didn't follow your rules. Why do you think you didn't follow your rules?
Well, when I was a little boy, my mom my mom and dad always told me that, just to be who I am and just, launch out there, and I didn't need to follow rules because, God was going to keep me safe.
Yeah, that's fantastic that you're able to dig that deep, and think about what your parents told you, and that it's a sign from God to not to be your own person. So why why do you think that it's important to continue to follow that now for trading, or is it?
So I'm glad you asked that because I'm thinking that having that belief actually put a having that belief made me or allowed me to be less structured than I really need to be when I'm trading. So wow, I think
Mm,
that part of what I didn't need to do is just become more structured
okay,
and also identify some disciplines I can take on that will help me to trade better. And
all
so, but
right.
anyway, that's an example, guys, because
Yeah,
Mike could
it
keep
sounds like
going
you're
here.
on
He
the
could
right
keep
path.
driving me into the dirt. No,
Yeah.
but that's a perfect example of those why questions. So thanks, Mike, for playing along.
Yeah, there you go.
So hey, what if we're constantly adjusting our system? Um,
Okay.
for where we're sitting there talking about control versus trust, why traders over tinker. What if we're constantly adjusting our system is what's keeping you from mastering it. And
Mm,
one of the things
that's
I,
deep.
I always like to talk about, just really briefly, is I am an engineer. And in talking with many, and for whatever reason, technical people are attracted to trading. And what I've noticed is that we engineers on our ivory towers tend to do a couple of different things. One, we want to reinvent the wheel. Two, we have the patience of a gnat. If it doesn't appear like it's working, we need to modify the process to make it work better. And then three, we basically, and so we're constantly tinkering, and in reality, we never really got started back with the simplicity of a simple mechanical system. And so we've ignored what Leonardo da Vinci said is never ignore the sophistication of the simple. And so if you're an engineer out there, stop trying to reinvent the wheel. Just work with us. There's just a few systems that work out there. Now you may redefine something a little bit, but almost every swing trading system has parts that are very, very similar. So what about you, Mike? I mean, in tinkering with your system.
I would ask the question of what it is that you're hoping to achieve by tinkering. Right, like
Okay.
so sometimes it's good to ask the question why, but it's also good to ask other questions as well. So what would you be hoping to achieve by tinkering with the system? Some people like to tinker for the sake of tinkering. Some people want to try to make it more accurate or have better results.
Yeah.
There's all sorts of reasons why somebody might want to tinker with the system. If it's done in a structured way with intent behind it, I think that it's perfectly fine to tinker. But if you're trying to fill a hole, if you're underperforming or you don't know what's wrong and it's just like let me try to change something and there's no real rhyme or reason behind it, then that's when tinkering can get us into trouble. And that's where you could end up with this like, you ever play that game Mousetrap? I think
Yeah,
they
a
came up
long
with
time
that
ago.
one back in the 80s.
Yeah.
Then you get something that looks like this Mousetrap where you just have 100 different things going on in the system, and it doesn't really work too well.
Yeah. So yeah, no, I agree with that wholeheartedly. The other thought that I have is a lot of times people approach their trading from a fire ready aim rather than a ready aim fire approach, but they fire and then they go back to ready and aim, or aim and ready. And what I mean by that is that they will start tinkering without having the data to know the actual performance of the system and the process. And hence, I think it's very important to when like if you came on with autopilot trading, you started learning. What I help people do is I walk them through their reps, where I expect them to get 400 trades, simulated trades, or you're not going to get real trades, but within 90-day period, get 400 trades under your belt. Then you can see how the system operates. You have enough data to be able to make a good decision, because you'll say, oh, okay, yeah, it hits 45 to 55% win-loss ratio, and here's what my earnings are, here's what my losses are, and then you have a foundation from which you can then start to, maybe I modify this a little bit here or there. And then I think also part of the deal is, once you have the data and the knowledge of the system and knowledge of yourself, you can ask the other questions that we hit earlier today. Am I really following my rules? Am I really following my rules, or am I slacking off on my rules? And so, because even with when we start a new discipline, it will feel awkward. It will feel, but it doesn't become habitual until, 21, 30, 21 to 90 days after you start the new discipline. And at that time, it becomes so natural. And this is something to check out with your trading system. It becomes so natural um, that that then you ease off on following your rules because you think, well, of course I'm following my rules because I've been doing so, and it's just habitual, and you do it almost mindlessly. And so with that, what happens is there's typically a reduction in performance. And so sorry if I went too deep on that.
No, I think the depth is good. I think that people get a lot out of depth.
So part of the deal, have we got some really good questions here is uh, what would happen if you trusted your plan for the next 10 trades without touching a thing? What
Yeah,
would
that's a great question to
happen?
ask ourselves.
Huh?
That's a great question to ask ourselves.
Yeah, what would happen? I mean, uh, I know when I first started trading, what would happen to me is oh gosh, I'd be filled with so much doubt.
Mhm.
Going, I hope it's going to work, but I don't know if it's going to work. Blah blah blah, and part of that was I didn't have enough reps under my belt
Mm.
to know that. Yeah, it's a deal of big numbers. Probabilities is a deal of big numbers, and
Right.
you know you don't know the probability of your system by just watching 10 trades. What
Yeah,
about you?
you need to build that confidence, and that's such a great thing that you've built into your program. 400 simulated trades. Yeah, well, I think that would be very difficult to not have a solid understanding of what to expect after going through something
Yeah,
400 times.
yeah. And so anyway, yeah. So that's let's see what else. Da, 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 da. So how about we now work on the remaining time we have left here? Let's talk about the developing a mindset code that top traders all have. Is it a deep dark secret? Is it common sense? Or is it you know disciplines that have been practiced over time? So, what if success in trading had less to do with your system and more to do with your daily mindset?
I think that people would do substantially better. So part of that would be, well, what's the daily mindset? Does that just mean that I meditate in the morning and I'm gonna magically turn into a great trader? Is that all that it is? No, like I think that it's all of it together.
Yeah,
Right? So I think that the preparation part that you mentioned before, where you're training people before they even get into placing a trade, that they
right
know
on.
exactly what to do and how to do it and why they're doing what they're doing. I think that that's very important. I think that having a well thought out plan is important, so that way you're already thinking 5 moves ahead.
Mm,
Where am I going to take my profits? Where am I going to cut a loss? What my sizing is going to be? What happens if the lights go out? What happens if the market's down 6% in a day? Thinking through those kinds of things and having that base of knowledge, right? Because
yeah,
if they're going and they're testing all of these trades from the past, uh, I it would be good to test it in multiple market environments. You've got
sure.
the number of trades to do that. Um, so there's those parts of it, and then well, once you have all that under your belt and you've got your plan, then when it's time to run the mindset component of it, that well, I think that all that part, even the planning part, goes in is you're building your mindset, and then when you open up your trading the next day and you're trying to stay calm and relax, and you're beginning your day with meditation or prayer or breath work, whatever it is, then that's where you're calming yourself and you're reflecting on what needs to be done, and you're playing it out in your mind, and you're able to enter the market with quiet confidence, because it's not just something that you woke up one day and you got yourself a meditation app and now you're going to be a great trader, but it's coming from a
Yeah.
point of preparation, and you're simply calming yourself before you begin.
Yeah, the good point, Mike, on the all of a sudden you get a meditation app and just and go I'm going to become a great a great trader or whatever, just like that. We were talking a little bit earlier about Jim Rohn, and Jim Rohn makes a comment, in some of his uh, motivational videos and motivational tapes, and CDs, and now it's all digitized. But he says that oftentimes people seek to change their mindset, to modify and improve their mindset, which is a good, noble goal, but without having the knowledge of why they want to change it. In other words, the knowledge about their trading system, or their profession, or that kind of stuff. And they think that this secret ingredient of well, if I just add meditation, or if I just add improving my mindset and positive thought, affirmations, and all that kind of stuff, if I just add that to the mix, I'm relieved of the responsibility to learn my craft, to learn how to be a master trader. They think that, okay, I'm relieved of that because I'm doing this other magic stuff. And he makes a comment. He says that he goes, motivation is really, really great. He says, but you have to have the knowledge to go with it. You can't be an idiot. And he uses some pretty plain words. He says, because what do you get if you just apply motivation and you're an idiot? All you get is a motivated idiot. And then they basically are going to go off, half-cocked, and making just bad decisions and all that type of stuff. So something to think about. So what are the top 3 beliefs that you reinforce either on a daily or a weekly basis, Mike, before you sit down to trade?
For myself or for others?
But for you.
The main beliefs that, it's funny. I actually wrote out a new prayer that I've been reciting for the past week or so. It's called the Builder's Prayer: Faith before fortune. And I have this written out. It's a little on the longer side, but I could summarize a few things here.
Sure.
One is asking for wisdom, strength, and clarity, not just to succeed, but to reflect your heart in all that I do. So a lot of this has to be not just doing things for myself, but to make sure that I'm aligned with God.
Right on.
Asking for provision, not for myself, but so that I can care for family, serve clients with excellence, give generously to my community. So in that way, it's one thing to ask, so that way, we could have the Lambo or the yacht or the mansion. It's something else to, I think, reflect the heart of Christ, where being provided for doesn't mean just hoarding it for ourselves, but being able to give generously to our communities and those around us.
Exactly. Yeah.
And the prayer goes on, but I think you get the gist of it.
Yeah, that's so funny, Mike. And that's one of the things I just love about working with you, because we are following such a parallel path with each other with our trading and our faith. Because I do something similar every morning as I'm sitting down in my quiet time and all that type of stuff. And I just start off with a simple a little prayer also. and I say, "Good morning, Father," to acknowledge, whose I am, and then I say, "Through your power, today I claim and declare victory and divine favor over my life, my family's life, my decisions, and my projects. The best is yet to come."
Hmm. I
And
love that.
huh?
I
It
love
is.
that.
And like I said, it's just kind of simple, but it's like a reset button. It recalibrates. And so that's one of the things that I do. I think that Mark Douglas, in his work, also in um, when he was talking about having a trading edge, he said one of the things he would do in the morning, he would ask himself, "Am I ready to give myself money today?"
Mm.
And if the answer was no, or if he didn't feel real great about it, he would basically either not trade or go in very light, very, very
Mm.
light. And so, da,
Yeah.
da, da, da. Do you have
Yeah,
a
Mark has
process?
something similar that he says to himself too.
What's
One
that?
of the things that Mark Minervini will do to prepare every day, he'll look at himself in the mirror and tell himself, "Hey, you could do a lot of damage to yourself in the market today," and remind himself of that. And
Yeah.
that's something that's helped him to manage risk and to stay in this game for so many years.
Yeah, without a doubt. Because the thing about it, like I said, like we said earlier, I said earlier, is that you can work your butt off to establish these really strong trading disciplines, but I won't say it's a never ending battle, but it's a never ending challenge to keep yourself sharp. And to keep yourself sharp, you have to keep, basically just iron sharpens iron. And you basically have to continue sharpening the saw or sharpening the axe. Because if you don't, it gets rusty. And I don't know if you've ever swung a rusty axe that its blade is really dull, but it's darn near impossible to cut down a tree, even if it's a small tree, with a rusty, dull axe.
It's
So
such a great analogy. I haven't swung an axe myself, but I get it because here's what and this is perfect. So many people will go sign up for a course, read books, and you get real excited. It's the first time that you read it, and then
yeah,
what happens after that? To so many people, and I've been guilty of this myself, so I know. You take it, you put it on the shelf,
yeah,
starts to collect dust, and the maintenance of that saw deteriorates.
exactly,
So it's the
exactly.
daily work. Like when you're talking about the work, it's the
Yep,
daily effort to reinforce it, right?
yep,
That maintenance. That's well, that you want to know what the work is? That's what the work is.
yep. Because as a technical analyst, if I haven't looked at charts, every day, even if only two charts, like we're talking like 5 minutes worth of chart reading, if I haven't done that, I'm not keeping my axe sharp, and I've messed up. I have sown the seeds of failure, because how you do anything is how you do everything.
Mm,
And so I know I need to be, you know, I have a handful of ETFs that I watch. And if I'm not
mm,
reviewing them every day, which is basically 6 days a week for me, because I do take Sunday off. But if I'm not watching, to see what's going on with those, 6 days, one, I miss trades. I miss, which I think nothing can, very few things feel as bad to me now, is that if my failure to follow my process and my discipline results in me missing a trade, and that trade goes on to make, 10, 15, 20, 25%, because I'm
mm,
too late. So, so Trader's Creed: I protect my capital first. Losses teach me. Wins reward me. I trade what I see, not what I feel. Wow, that's pretty good. You might want to write that down, everybody. I protect my capital first. Losses teach me. Wins reward me. I trade what I see, not what I feel. So,
it's a great one.
So that might basically, wraps up this, guys. If you guys have really, let us know what you've gotten out of these 4 episodes. Um, and I will brag a little bit. I think it's some of the best work that Mike and I have done together. And again, please, recommend, and leave a review on Spotify and or on the both Mike's YouTube channel or over on X, because we're both on X. Leave a review, and not to necessarily tell people how brilliant we are or anything like that, but just let people know that Mike and I are really honestly sincere about helping you become a better trader, a master trader, and we share from our heart all of our our experience. We don't leave anything, we don't hide anything. We basically, and if you have any questions about trading or anything like that, please shoot us questions and we'll be glad to take those on. So, as we said, next week we've got Bobby Campus of Path to Profits. And we're just really excited to see Bobby. And Bobby, if you're listening to this, we'll give you a big shout out. So, Mike, what else we got? Anything else to say?
It's a wild market out there. Be careful, plan, and reflect on the creed that Dennis shared earlier.
Right on. Matter of fact, I will just, in case you want it, here, let me do this. I will throw this in the, there you go. So before we sign off, you can do a capture on that. And so I'll give you about 2 minutes. So, yeah, Mike, what's really interesting about the market right now is I do think we are getting close to a bottom. We can get a little bit, deeper, but momentum on the longer term charts, the monthly and the weekly charts, is really starting to tank. Historically, well, yeah, you can continue to go, down below the 20% that marks a bear market, but historically, markets don't stay down in those areas for long. Also, look at, there's 3 things to look at that I like to look at in estimating when we're hitting a bottom. One, of course, is price action on the indexes, but I watch the percentage of stocks above their 20-day moving average on the NYSE. When it is oversold, it's down like 5% of the stocks or 10% of the stocks are below their 20-day moving average. It doesn't stay down there very long, and that's typically a sign that we're going to rally. 2, the second one is the VIX. What's the VIX telling us? And when the VIX is overcharged, it'll spike up, and we're getting to those nosebleed areas right now where it could spike up and then give you a 1-day reversal. And so you want to be ready for that, because that could be a major rally at, the rally attempt, and then you look for the follow-through day. And the last thing I ask is, am I at a level of past support? Because if I'm not, that's probably telling us that, hey, we're going to go deeper. We're going to go deeper. So those are kind of the 3 things I kind of evaluate as we're waiting for the market to turn. And cash it's okay to be in cash. So, well, everybody should have had time to basically copy that Trader's Creed. And so I'll say aloha, God bless. Mike?
Yeah, take care, everybody. Great seeing you, and looking forward to talking with Bobby next week.
Right on. See you guys.
Take care, all.